Unfortunately, most people are going to lose everything in the next couple of months. You're not going to hear this news, of course, on the general finance media because it's not in their interest to share this type of a panic situation. So look at what Wall Street is expecting, and it's already preparing their portfolios, because the most bearish case scenario for precious metals, it's already on the table. According to Wall Street, their current adjusted portfolio is setting for sharp correction or extended bear phase of the gold and silver. Why is that? After the blow off top, all times high for both, they don't see the same amount of money coming back in. So they don't expect the boat to go back up again. So what this means, all the people who are sitting on losses, they will be waiting, and then they're gonna be tired of waiting, they're gonna sell and they're gonna leave. What will this do to the price? It will push it even lower. Look at this. It's not only that they're expecting bear case to get worse, but they also see lower highs, lower lows, and also potential for multi-year downside if the correction worsens, which means, we talk about it, it's either going to go down 20 to 40%, or it's going to go down slowly but surely. 3% a day, 5% tomorrow, 2% tomorrow, 3% the day after. And then little by little, you will compound and you will get the same 20 to 40%. The market is really, really scared, considering that the negative beta for both is no longer there. They don't go on the opposite direction when the market crashes. As a matter of fact, they crash even worse than the market. Second important element here, Wall Street is focusing on two main aspects. Technical. First of all, they're having and they're measuring every inflow and outflow on a daily basis. If today the market goes up in dollar value 1% for gold and silver, they have a charts where each candle represents amount of money that went in or went out. So on the daily basis, they can figure it out. Are more money coming in, or in fact, less money are coming in, more money are going out, which means outflows, which means less interest and less higher highs. You can't push it back to the previous highs when there is no money coming in, when there is no inflow coming in. So their technical analysis indicates that blow off top preceded the current downtrend. So there is no reversal coming in. Some bearish analysts on Wall Street also are going even further. They are setting their expectations, price targets, and estimates for overextension beyond the key moving averages. You have 30-day moving average, 50-day moving average, 100-day moving average. So the further you go, the lower the moving average will be. So what they're expecting? They're looking into where the supply and demand, where the support and resistance will establish the new trading channel, where the price will feel comfortable trading, hitting supply and demand zones for extended periods of time. Because so far the gold has been sliding. The gold doesn't feel comfortable at or around $5,000. It didn't feel comfortable at the levels around 5,100 either. So when you don't have the established trading channel where you can predict the stabilized move of the price, you don't know what's going on. You really don't know what's going to happen. Second important element here from the analysis from Wall Street. Several of the key Wall Street experts who analyzing the market, the precious metals market, they argue that silver in particular could lead to a sharper rollover. Why is that? There's something called divergence with the gold. 2-3 days ago, I showed you a chart where it represents the gold versus the silver price moves. You will be able to track how slow, or sometimes even didn't appear at all, silver catch up with the price move of the gold. So the gold goes up, people look for the divergence of how the silver will follow, if the silver will follow at all. There were many instances where gold went up, silver not only didn't follow, silver actually fell down, went into the opposite direction, something known as divergence. And this is probably one of the worst news if you are precious metals bull, precious metals investor. Why? Both cases for precious metals are hedging against the market with greater upside and probably lower volatility. None of these play out, and each one of these have been destroyed in real time. They all fall with the market. They are more volatile because in the small political news or economic news, they're falling even more than the market. And the last but not least, the upside is not greater. Why it's not greater? Because they're already down 40-50%, right? The stock market is not down 40-50%. So this means that there is a greater upside. The market to break even from previous all-time high, it only has to go up 2%. For the gold to make new all-time high, it has to go up 60%. For the silver, it has to go over 100%. So you understand that the whole thesis of the most bullish and people who think that they're smarter than anybody else is destroyed in real time. And Wall Street knows about this. I'm pulling this information directly from the Wall Street internal informational flow. This is not gonna, you're not gonna see article opening whatever media you're using. They're gonna warn you, oh guys, you know what? Wall Street actually thinks that the market's gonna crash even more. You know, Wall Street thinks that the market will have a consistent, problematic downtrend for the precious metals. You're not gonna tell you about this diversion that I just told you between gold and silver. But that's okay, right? You don't really care. Anyway, last but not least, the gold bears, which effectively are usually family offices, they are focusing on the shorting the gold. So they're thinking and they're emphasizing that there is a possibility for much longer cycles that is stopping the transition between the current small short-term bear momentum, which is not yet a cycle because, things could change. It has been like 3 weeks already since the big drop of gold, right? So you cannot really call it a cycle yet. This is a bearish term momentum. So they're thinking that if macro conditions actually shift, which means the new Fed chair, real rates, go down, dollar strength, which we're going to make the dollar great again. That's no doubt about it. Inflation dynamics, we're going to see the CPI data. So some of these analysts have framed 2026 to be a turning point for a lot of these precious metals, which means is that we most likely, according to them, have seen the tops, the highs, and it's over. According to them, they see something very similar that appeared in 2021 with Bitcoin hitting 65,000. Everyone was hoping for 100K. The Bitcoin fell down to 15,000. I remember this freaking bear market. It was awful. So be cautious out there. This is the latest from Wall Street. Be very careful, okay? Do not think that you're smarter than the markets, okay? The markets are always smarter than you, and they're faster than you as well.